Good afternoon, everybody. I am here with Professor Richard Murphy, and we are going to talk about the National's ongoing series From the Cradle to the Grave. We've been examining all week the changing face of the welfare state in the UK, looking back at where it came from, looking forward to where it's going. And yet, we have managed to get a little bit of Professor Richard Murphy's time to speak today. We're going to talk specifically about, well, a few aspects really. To start with, you've written in the paper today, Richard, about benefits and about I guess, the economic benefits of benefits. I don't know if you could just explain briefly what your kind of driving point is.
Yeah, this was really important. Laura, the editor, asked me if I'd write this earlier this week. And in fact, I'm at the moment writing a series on wealth and all our misconceptions about wealth, which are going to come out as a series of videos on my Richard J. Murphy YouTube channel, shameless plug, starting next week. And this sort of fitted into my thinking. Basically, the point is that we hear all the time that we're dependent upon the wealthy and aren't they kind to give us benefits and to provide us with employment, and trickle down economics works. And it's all a load of rubbish. Technical term there. And what I was trying to show in the article, which I hope is comprehensible, is that in practice, paying benefits makes immediate economic sense, not just for those we're supported, because they'll be better off and so will their children and so will their grandchildren and so will society, because obviously we will therefore not have sick people and so on, but also their income, their benefits become someone else's income. And when they become somebody else's income, tax is paid on it. And then after tax, what people get is spent, and that becomes somebody else's income. And then they pay tax on it, and then what's left over, they spend, and so on. And this continues until, in fact, the wealthy get hold of any part of this and save it. And they actually stop this virtual cycle going around in the economy. So far from the wealthy being, in fact, the benefactors, the wealthy are, in fact, the people who break up the flow, cause us to have a cost, and are generally the people who mess up the system. And this will, in fact, be one of the major themes of that series that I'm going to be creating. So all the logics about the fact that we're pouring money into a black hole, which every right-wing politician will tell you when it comes to benefits, which is why, of course, Labour thought they could do this and would get away with it. Absolute nonsense. If we pour money into the bottom of the economy, we create more well-being, more wealth, and even more wealth for the wealthy than we can by ever providing benefits to the wealthy, which is how most of our system is stacked at present.
The way I had it explained to me a long time ago was that to think of money as like blood in a body. And I guess in your analogy here, the benefits are the blood circulating around, and then a rich person's savings account, someone like Jeff Bezos holding billions, becomes like a blood clot. And it prevents the flow. Is that a fair explanation, or am I talking?
Or even think of it as the medieval bloodletter. They actually literally take the blood out of the system. Savings, and again, this is something that most people really find it very difficult to understand, but savings are actually dead money. You put it aside, you take it out of the system. You aren't using it. It's not of any economic value anymore. And the wealthy are very good at saving. That's not surprising. That's one reason why they're wealthy. You know, this is actually an obvious thing to say. And because they take the money out of the system, they stop it flowing, they stop it benefiting, they stop it creating trade, they stop it actually from being invested, because there's no relationship between saving and investment at all in the real economy. So I'm not saying people shouldn't save. Obviously, we all, if we can, would like a rainy day fund, and it's a benefit to have one. And I'm not saying people shouldn't create pensions, but excess saving is a real problem. And getting these things right is going to be a recurring theme of my work for the rest of this year. Maybe it'll come up again in the National. I hope it will.
Yeah, I guess there's a big difference between like kind of ordinary people saving a few grand for that big purchase against somebody saving tens and tens of millions that's never going to get spent or put back into the economy in any way.
Yeah, absolutely. I mean, the average pension pot in the UK, very important to say in the context of this week's articles, and this is a UK figure, I haven't got a Scottish figure, is about £60,000, which is not, in the overall grand scheme of things, in terms of pension wealth, a lot of money. The top 10% will very often have more than £1 million or up to £1 million at least on average in their pension fund. So you can see how disproportionate their wealth is to everybody else's. And there's nothing wrong with saving some money for a pension. There's nothing wrong with saving some money, as you say, for the big important event or whatever it might be. But when we talk about the scales of money put aside by the really wealthy, we are talking about things that actually are preventing growth, which most people just don't get. The trouble is, we think that the household and the state behave in the same way. And almost invariably, what is good for the household is not for the state, and vice versa. They are the flip side of each other, quite literally. I mean, think about it in terms of tax. Tax is bad news for the household, but it's great news for the state because it needs it. So, you have to view things as being the equal and opposites when you look at these things. And savings are bad news and paying benefits are great news for the macroeconomy because people are actually going to survive. They're going to have an income and they're going to spend it. And that keeps the rest of the economy going. And what's more, the government, so long as the money isn't saved early in the cycle, will get most of the money they spend on benefits or even more potentially back by way of tax paid. It's as simple and straightforward as that. And yet you'd never believe that if you read the Daily Mail, you read the Daily Telegraph, you read the Herald probably, or the Scotsman definitely.
So you wrote about something called the multiplier effect, which you've I think mentioned there, where you said if you pay out a certain amount of benefits, the government might even end up getting more than that back. Could you explain how that works? Because that seems a bit counterintuitive.
Yeah, look, when you pay, let's call it, I'm going to use a round number because nobody's going to get this much in benefits probably a month, but £1,000 in benefits. And the person gets it, and actually most benefit recipients won't be paying tax on it, but benefit recipients will spend everything they get because they are in the lowest part of the income profile, almost by definition. So they spend the money and somebody gets the money. And first of all, VAT will probably be paid out of what they spend by the company who sold them whatever they need, whether it be a supermarket or anybody else. And then the supermarket will pay its staff, and those people will have income tax and national insurance paid, and it'll pay suppliers who will pay VAT again and corporation tax and then pay their staff, and income tax and national insurance will be paid again. But importantly, of course, the supermarket will have some money left over, so will their employees and everybody else. So they spend. And every time the spending takes place, the money goes round and round and round. And every time it goes round, a bit more tax is paid until you actually end up either recovering as much or sometimes more. And in fact, in the case of some benefits, I'm pretty darn sure it's more. The official estimates of this are lower than I think they actually should be, but that's the UK Treasury for you. They're not terribly pro the poor. And so they tend to come up with things that prove that we shouldn't be paying people because they're just, well, let's be polite, downright mean. That's my politest version. It's Friday afternoon.
Yeah.
And I believe that the multiplier effect proves that, in fact, paying benefits is just a worthwhile activity, apart from the fact we don't want people living in poverty. It actually makes economic sense.
So I was having a look at some of the figures from the UK government that have come out this year. The first lot of figures we got were about the amount of money that they're losing to benefit fraud, error. The net figure is 8.3 billion. They say that they accidentally or wrongly, probably not accidentally, paid out 9.5 billion, and then they didn't pay out 1.2 billion that they should have. So they've got 8.3 billion there. But they're looking to, I mean, we're hearing really tough language from the Labour administration. They're like cracking down on benefit fraud. They're going for driving bans. They're going to be spying on people's bank accounts. They want the power to take money directly from people's bank accounts in some cases. But we're going to move on to talk about the tax gap here, which is a much, much bigger pot of money. So 8.3 billion, remember, lost to benefit fraud and error. The tax gap, that's the difference between what HMRC thinks it's going to get and the amount that it actually does get. These figures were published 2 weeks ago yesterday, and they showed that for the year ending 2024, that was £46.8 billion.
Which I guarantee you is an underestimate, and a dramatic underestimate, almost certainly, just to put this in context. But
why do you think it's such a massive underestimate?
Well, let me first of all make it clear, if we talk about benefits, just for a second before we start. If the system is so bad that most of the money paid out on benefits by mistake is by the government itself and not by people making false claims, actually don't blame the people who make mistakes, because there aren't that many. The number of real fraudsters of the benefit system is relatively low. I'm not saying there aren't any. Of course, I'm not naive. I'm not stupid. But the big problem there is actually the government investing enough to make sure they get the claims right in the first place. When we come to the tax gap, I have been writing about the tax gap for about 20 years. I was one of the very first people to write about the tax gap in the UK, preparing an estimate in 2006 before the Revenue did. And I've become, along the way, somebody who's considered an expert on this issue, including reviewing the European Union's tax gap on its behalf as an official appointee of theirs. So I know a bit about the tax gap, and I've written academic papers and stuff along the way. And my belief is that many of the definitions that HM Revenue and Customs use are just nonsense. For example, tax avoidance does not include things like people setting up companies so they don't pay national insurance, apparently. That's not tax avoidance in this figure. And yet that's incredibly commonplace. Up to 1 million companies might exist only for that purpose. But they say that's not tax avoidance because they haven't deemed it to be tax avoidance, so they don't include that in the number. So there's a big number that disappears. And when large companies shift profits out of the UK using something called transfer pricing, they've never called that tax avoidance. They've called that a misstatement of profits, but it isn't in the figures. So one of the biggest issues that when I was spending a lot of my life campaigning about corporation tax abuse has arisen is not in these figures either. And what is more, if we look at the figures for tax evasion, and they are big, the Revenue bases those on errors in tax returns that are submitted to them. But they actually only ask, for example, for tax returns from about half of small companies. The other half, they presume, aren't doing anything. How do they know that? They haven't asked them. They haven't checked. They could be undertaking vast amounts of tax fraud, but they don't bother to actually go and search that lot. So I believe that their sampling basis at a purely technical statistical level is, again, it's Friday afternoon. Let's be polite. Let's call it ropey or bad or just wrong. We won't use any stronger language than wrong. It just doesn't reflect the realities of what's going on on the ground. So these numbers are almost certainly understated. I think the tax gap could be as big as 80 billion, easily. Oh, and by the way, we also know that the figures for offshore cheating are understated here. Because in fact, as a result of work that I did nearly 10 years ago now, but which massively changed the international tax system, I created a form of accounting so that large companies have to actually report their use of tax havens. It's called country by country reporting, and it basically is my baby, and it's now international law in 80 countries, including the UK. We've recovered a lot of tax, but we also put into place something called automatic information exchange. I was told in 2009 we could never get data out of tax havens. It wouldn't happen in my lifetime. They would never cooperate and never provide information to the UK Revenue. And so I set out to campaign that desperately difficult illegal act now in the UK, according to some parts of the government, and because they don't seem to like campaigners anymore. See my column on Monday in the National for elaboration. I will tell you about that one now. And because of the work that I did on that, we now have got information from tax havens. They told me it wouldn't happen before I died. And I'm very glad to tell you that I've actually already been alive for 8 years since it started. And that is showing that there is a lot more money hidden offshore than their figures have ever represented. And they are recovering it as a consequence of what I did. So I've never had a note of thanks, let alone an MBE. I don't want an MBE. Please don't ever talk about offering me an MBE.
So in the figures that we actually, I accept what you're saying, but in the ones that the UK government has published, they're accepting, there is a really, really stark pattern from 2021. It instantly changes. We go from a corporation tax gap, so that's the difference between what the HMRC is expecting corporations to pay and what they're actually paying. It was about 5 billion in 2018, 4.5 in 2019, 5.5 in 2020, just kind of oscillating. And then in 2021, 2022, we just see it skyrocket to last year 18.6 billion. So the amount of tax that they're expecting but not getting from businesses is more than 10 billion more than the total loss to benefit fraud and error. So what is happening here? Why is corporation tax this? I think I heard your quote, but I've lost it. I think you said they've lost control, but I wouldn't want to put words in your mouth there.
I did say they've lost control.
Yeah.
I said they'd lose control in 2010. And this is one of those cases where I hate to say, I told you so, because I was right. And what they proposed in 2010 was a cost-cutting exercise. They basically said that all the smaller tax offices, which were found in every town and spread across major cities in the UK, and I do mean in the UK, were going to be shut. There were tax offices all over Scotland, from the borders to the islands, particularly the top islands, the Orkney and Shetland. But also, Inverness had offices, Aberdeen had plenty of offices, Dundee had offices, and, there were plenty in Glasgow and everywhere. There's now two, basically, Edinburgh and Glasgow. North of Edinburgh and Glasgow, it's as if you're in the wilderness when it comes to tax, because they've tried to shut everything down and concentrate all their work in large central offices. They don't send people out into the communities. You in the community can't go and ask them for help face to face to get things right. And they gave up doing inspections of people's VAT records on site, which used to scare the living daylights out of traders. And I can tell you that's true because I was a practicing chartered accountant for a long time, and my clients got scared out of their wits at the prospect of having to sit with the tax inspector and often asked me to come along. And that was the best weapon there was to make people be compliant. And the revenue gave it up, and they moved everybody into these large central offices. I say just two in Scotland and nothing north of the Central Belt, which is just bonkers, crazy, mad. I'm coming out with these nice moderate terms this afternoon. And here we see the result. As this became more obvious and people realized that their tax affairs weren't going to be regulated, and it became more obvious that they could get away with forming limited companies with nobody asking any questions at Companies House or at the Revenue, and vast numbers of companies, something like 800,000 companies a year are formed in the UK, and almost that many disappear in the UK each year. There is a churn of limited companies who are probably trading and who never pay their tax. And we've now reached the point where it is 40% of the tax owing by small companies, corporation tax, is not paid. But my point is that if they don't pay their corporation tax, they probably also don't pay their VAT and their PAYE on what they should be paying their staff. So, in fact, I think that those gaps are also understated. But the revenue works in silos. They work out there's a gap with regard to small company corporation tax, but they don't then say, hang on a minute, does that mean they're not paying their VAT and their PAYE as well? So we have ridiculously low rates of apparent loss to PAYE, which are just nonsensical in this case, because half the people in the UK actually work for small companies, those who aren't paying their corporation tax. So, they might be small, but they employ hordes of people. And yet, apparently, the revenue say all the PAYE is paid, but not the corporation tax. So I don't believe that either. So there's been this massive behavioral change, and it's entirely because of, and I have no other explanation for this, it's entirely because of incompetence at the top of HM Revenue and Customs. They thought they were running a business where the only thing that mattered was cutting costs, and they cut costs, and as a result, they've lost control of collecting tax. It's as simple and straightforward as that. They need people back in local tax offices all over Scotland, right down from Stranraer, right the way up to Wick and the Thurso. There used to be a tax office in Wick and Thurso. I actually dealt with it once, which was quite bizarre when I was in London at the time. But there was one. And now, there isn't. We need to have that range. And those people on the ground who know who the crooked accountants are, who know who the crooked businesses are, and who know where to go to collect the money, that knowledge has been lost, and we've seen the cost. 18 billion a year disappearing, vastly more than benefits, all because they thought they were being so clever by cutting out local tax offices, and they weren't.
Yeah, the 18 billion a year figure is just really, really quite stunning. When I was looking through the numbers for this piece on the tax gap, which is on our website right now, people, you can go and look, and you can see these graphs, which I'm not able to bring up onto the live screen. Sorry, I'm just not.
Which I got to help me.
You can see the gap grow from 2021, and it's all down to corporation tax. And To be fair to Labour, they did put in their manifesto that they were going to try and do something about this tax gap. They've said that they're going to recruit 5,000 new tax officers in a bid to raise 7.5 billion annually. So it's not exactly a massive.
I call that a poverty of ambitions, Under. I mean, that really was not actually, in the face and scale of the problem, really rising to the challenge. And let's be clear, those 5,000 new people aren't all people who are going to be chasing the tax gap. A lot of those people, over 3,000 of them, are people to actually answer the phone, because the revenue is so bad at answering the phone, which you will know if you've ever had to phone them, because it's terrible. It's like enough to make me very glad I'm not now actually acting as a practicing chartered accountant anymore, which I'm not. With regard to that one part of my activities, I've retired, and I'm very grateful. After 42 years, I think I've done my bit. So we really do need to spend more on this. The yield for every single pound spent on trying to collect money from fraudsters is over £10. Why won't you spend it then? I mean, if you offered me the chance to spend £1 to get £10, I promise you I'd take it.
Yeah.
I really would. I really can't think of a good reason why I wouldn't, would do anything but say, thank you very much, I'll do that.
Yeah.
And yet they don't. It's bonkers.
Yeah.
I spoke about this once, actually, with somebody who's remarkably close to the cabinet, but isn't in it. His name is Ed Balls. And he said, oh, you don't want to collect all the tax that is owing. That might close the economy down. And I thought, Ed, you don't understand. He was, by the way, Shadow Chancellor or something at the time. And yeah, he didn't understand, because this policy of not collecting tax is deeply, deeply destructive. And who it's deeply, deeply destructive from is honest small business. If 40% of your competitors are cheating and not paying their tax, honest small business is bearing a cost which is unfair. They're actually having a burden imposed on them, and they haven't got a chance of competing on a level playing field. So this is an anti-business policy. Labour says it's pro-business. It's just putting in place a stupid policy to mean that we don't have to file full accounts on public record, because that would cost 15 quid a year for each limited company. For heaven's sake, grow up, Labour. If you're pro-business, you want information on public record so we can find who the cheats are, and you want to chase those cheats because that creates the level playing field for honest businesses, and that's the only basis on which you can get growth. But it seems that whenever they can, Labour will choose a policy which is anti-growth. God knows why somebody would vote for them when they have so little comprehension of what's going on in the real world. It really scares me. By the way, the Tories are no better. So we are left with an option which I won't mention. And it's not, Nigel Farage, just in case.
It does seem astounding that, as you say, that stat it keeps coming up. 40% of small businesses not paying the corporation tax is crazy. I feel like if that was just people are large, that would be the front page of every paper. 40% of people not paying their taxes.
Oh, by the way, the figure is 20% for people who are self-employed. And now you come to another point. Why is it that the fraudsters know they can, in fact, get away with it more if they form a limited company? Because we have absolutely zero effective company regulation in the UK. The UK acts like a tax haven. You want a company? Have a company. We don't ask any questions. We don't ask you for accounts. If you don't comply with the law, we'll just get rid of your company for you. You can form a new one. No questions asked. You can have it tomorrow. Start again. Repeat the process. You know, we talked about the multiplier effect a little while ago. We effectively have a multiplier effect here of fraudsters forming companies, not doing anything to pay their tax, getting rid of their company, forming a new one, doing it again, getting rid of that one, doing it again, getting rid of that one, doing it again, and on and on and on. There's a multiplier effect of fraud here because the government can't be bothered to enforce company law. And that, again, is absolute, pure and utter negligence. And I really do think it's negligent. These people are really, really failing us badly. And I am angry about this. I've been talking about it for 20 years and it's still going on, for God's sake. The embarrassing thing is, and I've got to admit this, I used to spend my life telling the world what terrible places Jersey, Guernsey, and the Isle of Man are, and Cayman is. And you know what? They actually run better company registries than we do now. And that's shockingly embarrassing that I have to say that, but they probably do.
Yeah, so when I was reading around this, that pattern that you've just described of setting up a small company, it gets in trouble, you shut it down, you start a new one. That's called phoenixism, I
Yes.
understand it.
Yeah,
Yeah,
you
so
rise from the
hopefully,
ashes of the old one. Yeah.
yeah, hopefully we will start hearing words like this a lot more, and we will start seeing a crackdown on this. Well, this massive, these missing billions. But I don't want to keep you all evening, Richard. I'm aware that we've run over a little bit from what we said we would do initially, but yeah, so we'll wrap up there. So thank you so much, everybody, for tuning in. Thank you for your time, Richard. It's been really great to speak to you. And yes, everybody at home watching us, well, wherever you might be, you can find our full series From the Cradle to the Grave on the national.scot. It's been in the papers all week. And yeah, hopefully, like we have researching it and publishing it, you have all learned something this week. So thank you very much, Richard, again, and for everyone watching as well. Thank you.
Thank you.